All right, well, Uber stock cruised in 2023, closing out the year up over 140%. Analysts over at Wells Fargo see more potential for the ride-hailing stock in 2024. The investment bank calling Uber a top mobility stock pick for this year. And joining us now to talk more about this bullish call, Ken Gawrelski, senior analyst over at Wells Fargo. So Ken, I want to start with kind of the story for Uber right now and the one that got the street excited last year in your view. Like, what were the levers the company pulled in 2023 and where you see them, kind of pulling things as we get into this year and beyond?
Absolutely. Thanks so much for having me on. So the story in 23, where you're right, there was exceptional performance, outperformance of the NASDAQ and the market overall for Uber was, I think, a continued healthy overall rides and delivery fundamental case and growth combined with margin leverage, right? And this has been elusive for the company for many years, but they are delivering on what they've promised. And so I think the combination of the two, and frankly, as we kind of move to the next, and this is as we talk about 24, as we move to that, this is the next iteration of what Uber is evolving to. Was if you go back, this was a summer 19 IPO in the low 40s. The stock's now at 58, right? So the stocks hasn't moved a whole lot over those many years, but we went through a COVID period that was a complete reset. But we think this is going to be a very much a simplified compounder story. It's hard to find large cap compounders in this market, and we see this as a $125 billion market cap that can compound nicely with some incremental drivers in the first half of 24.
And Ken, thinking about Uber and Lyft, and we'll keep it just to the U.S. ride-sharing market, I'm curious what the state of that story is. Obviously, both companies now have other components to their business, but you mentioned the 2019 IPO. What got us there was that market, coming into existence, 14, 15, 16. Right. What's the state of play today in the U.S. ride-sharing market between those two companies? So
we're roughly 70-30 market share, a couple points here or there. Uber with the leadership share, Lyft at the number 2 spot. I would call this a pretty rational duopoly. And they fiercely compete for riders and for drivers, but this is evolving into a more rational duopoly. We have a new management team, a new executive team at Lyft. I think these companies are less share focused and more focused on generating value for all stakeholders. That includes drivers, riders, and shareholders. And I think so. I think we are kind of in that next step of evolution into a duopoly market domestically. And we've seen healthy supply of drivers, which helps the marketplace. We've also seen healthy demand, and we think that continues into 24.
So Ken, here we are today, like you said, 70-30, that new leadership at Lyft, their ability, I guess, how confident are you that they are going to be able to chip away some of that market share from Uber? What does that timeline look like?
Sure, it's a great question. So I think the new management team, they've stressed that they're going to do it via product innovation and not via pricing. So if you look in the past, there's been prior Lyft management had taken some pricing initiatives and they subsequently lost share, right? And so what I think you will start to see is more product differentiation. There's a product at Lyft called Wait and Save, which appeals to more value conscious customer. Uber tends to skew a little bit higher on the demographic scale. But we see overall pretty healthy competition. I think at the margin we'll see a couple points of share trade hands, but overall we see a pretty rational environment here.
And Ken, the last name really within this universe is DoorDash, and I'm curious what you see there for their business, the things that they're kind of looking at as they head into 2024, and really the ways that they are or are not competing with Uber on some of those crossover markets. For the time being, we'll leave the Instacart IPO discussion out of this, but just curious on the DoorDash question, kind of where you see that company headed. Again, we see here equal weighted on that stock heading into 2024.
Yeah. So DoorDash was another very impressive performing stock in 2023, and it was really about positive revisions. So what I'm saying is that the street, the consensus EBITDA estimates moved up significantly for 2023 and 2024. We actually see continued upward movement in those numbers into 24. Now, DoorDash operates in the core food delivery business, is also expanded into grocery and convenience areas where our newer investment areas, they're losing some money in those areas. But what we've seen is that DoorDash has a leadership position in food delivery domestically. But again, we are seeing a rationalization of competition. If you go back several years ago, there was a period where there was intense competition, intense promotions on the consumer side, and there was many venture dollars spent and kind of lost in this area. Now we've seen a rationalization of these markets, and we see a healthier overall backdrop heading into 24.
All right, Ken Gawrelski, great to have your insight there. Wells Fargo Senior Analyst. Thanks so much.
Thank you so much.